the idea of this whole event was the fact that there are so many things, so many influences on the markets that there are lots of opportunities, but they're getting the opportunities are getting faster and faster, and they go away faster and faster than they used to because of the technology today. And it's not just the technology that you might be thinking of, or you might be assuming. You know, there's a lot of other technology that is influencing what's going on in the markets today. So for me, this guy here is the markets. Okay, he's the guy behind the markets. He's got just pockets full of cash. You just have to learn how to take it from him. Okay, so that's what I'm going to teach you how to do. We've got this award-winning trading system and indicators. Also, an award-winning trade room. We put on training workshops. We have training videos. We've got accelerated learning programs, and we have a cool peer mentoring program starting in a couple of weeks. That I know that's just an inside joke with the rest of our traders because I've been saying a couple of weeks for a long time, but um, we're really are almost ready to go with that peer mentoring thing. Okay, so I'm going to teach you how to take money from that guy, and it's never going to be a lot at one time, but it's consistent over time, which is really what you need. That's really what you should be looking for in your trading is consistency over time, not a lot at one time. Okay. Now, there's a lot of influences in the market, a lot more than you really understand, that any of us understand. And you kind of think about some of these influences in the market the way that you might think about influences in the weather. Okay. If I'm sitting here right now and I look out the window, and from my observations and from any of the data that I could collect, how accurately am I going to be able to tell you what the weather is going to be at this time next week or next month? Okay, the problem that weathermen have is there are too many variables that or combination of variables that affects the weather. Okay, and a slight change in a minor variable can absolutely change a major variable to a great extent to where whatever they were expecting doesn't even come close to happening. And we've all experienced this regularly, right? In fact, it's kind of a running joke about weathermen, right? Trading is the same way. The closer to right now, if I look out the window and I see that it's sunny outside, I can almost guarantee that in 5 minutes from now, it's going to be sunny outside, almost, unless I look up and I see sky. So obviously there's going to be some information that I have, but I can predict the weather based on what's happening right now very accurately. And the longer from right now, the harder it becomes. Okay? The more iffy it becomes. Now, many of you are still trying to trade based on these long-term indicators where you enter a trade and you enter a trade now, and you have to hope that no other influences are going to affect the markets to change the outcome of that trade. Okay, have you all heard about the butterfly effect? The butterfly effect is a, it's not really even a theory, but it's a way of describing and understanding weather. And now the butterfly effect says that if some butterfly down in South America flaps his wings and creates a flutter, that little flutter can affect some flower, that can affect some bee, that can affect some colony of bees, that could affect some, who knows, on and on and on and on. So there's this huge domino treble effect where ultimately this little flap of the wings had a phenomenal effect on the weather. Okay. There are hundreds or thousands of influences on the weather, and that could be said about the markets also. Now, each one of these influences don't necessarily influence just the market. The influences could influence other influences or combination of influences. A minute change in one can cause a huge change in another one. This is why calculations are so unreliable. These minute changes are hard to predict or measure. Algorithms for medium term, I'm going to call medium term trading from a few minutes to a few hours, okay? Or longer term, which would be several hours. This is all for day trading, okay? Not for, I think of anything that's not day trading as either swing trading or even investing, okay? So I'm talking about day trading, which is, I think, what most of us are interested in. The algorithms, the math is not sophisticated enough for us to allow for every possible influence in the market and how each influence might influence each other that will predict exactly what the market is going to do. It's just too many variables. There's too many potential options to be able to put on a trade and sit on that trade for an extended period of time and assume that there are going to be no other influences, no butterfly effect happening somewhere else that could turn what could have been a winning trade to a losing trade. All right. So what are, the old fashioned way, when there were very few influences, everybody could watch what the market makers were doing. And the market makers were pushing a bunch of volume. And all the traders were just watching, well, what are the market makers doing? And that's really all I need to know. And a lot of people got very rich doing that. A lot of people, and maybe you, are still trying to trade the same way because there is a lot of information out there about that. But the reality is there's a lot more going on, and it happens in milliseconds, and it's influencers influencing other influencers. For example, social media, something comes out in social media. You're sitting there watching the charts and something crazy happens. Maybe somebody tweeted something. Maybe some story came out on Instagram or a Facebook post or whatever. We don't know, but it can certainly change the nature of your trade while you're in the middle of this trade. That when you got in this trade, all indications said this was a perfect trade to get into. So what do we do about this? We've got a lot of us who are single lot traders or small lot traders who are trying to trade these longer trends so we can make a decent amount of money on each trade. But there, unfortunately, are so many market influences. And because of these number of influences and combination of influences, that creates a whole lot of emotions for us to have to try to manage. So conventional wisdom says, just put on your trade and go with the trend, and you're going to be fine. The trend is your friend. Did you know that it's nearly impossible for single or small lot traders to ride a trend from beginning to end and make money at it? If you know anybody that has, let me know. Nobody really tells you that it's nearly impossible to make money that way. You have to be trading multiple contracts, and you have to be very adept at scaling or trailing, but basically managing multiple contracts at a time. Okay, that's the only way to make money on a longer term type trend trade because of emotions. Statistics say that you will not overcome your emotions. What statistics am I talking about? Well, you've probably heard, and I don't have, other than my own experience, I don't have any proof that 90%, 95% of traders that try trading fail at trading. But that's the common knowledge out there. That's the conventional wisdom, and I can say from my experience that's probably about right. Why? Why would that be right? Too many emotions to manage. So I decided I was going to stop trying to manage my emotions. I decided I was going to see if I could do something that reduced the amount of influence the influencers could have over me and reduce my need to manage my emotions. Okay, I decided I'm not going to trade for these big winners. How about just any winners? I want to just get good at winning trades. Okay. So the days of the big moves for the small lot traders are pretty much over. And unless you've got a crystal ball and you know when things are going to happen, you're probably not going to want to get into some of these longer term trades if you know that some tweet's not going to come out and ruin everything for you. So here's my take on it. Start small, but learn to be consistent. Step 2, stay small, be consistent. All right? So the message there is consistency is what you're after. You want to learn to win trades consistently. Does it have to be a lot of money each time? Well, you decide based on the way you've been doing it now versus getting in and out before those market influences have a chance to change what's happening right now. Okay, so some of this is kind of a paradigm shift for a lot of you. When I say paradigm shift, it's a fundamental change in how you've been approaching trading or your underlying assumptions about trading. And the problem is there's 100 years of information out there in the on the internet for the markets up to a few years ago. There's not a whole lot of information on the internet based on the way the markets move now. So what we're looking for now is small improvements, small trades, gaining some regular consistency. And don't look for growing your trading account by hundreds or thousands of dollars a day. That's setting yourself up for failure. Let's just look for consistent trading account growth. Okay? So how do we do that? How do we do that? We trade pullback trades. So when you're looking at this chart, there are some very obvious things happen. And I use this same image, and I have been for many years, and it could be any day in any market. It doesn't matter. This could have been today for all you know. So we're all about increasing our odds of taking a winning trade. Now, something specific happens at on this chart and on any chart. Price stops and changes directions for what appears to be no reason at all. If you were trading without indicators, you really wouldn't have a good feel for why price stopped and changed. But if you start measuring what's going on inside the candle just before the change, you're going to have a lot better idea of when to expect price to stop and turn. We're measuring what's happening right now, like I'm looking outside the window and I see sunshine and no clouds. So 5 minutes from now, I can pretty much expect it's going to be sunshine and no clouds, because the number of influences won't change over that short period of time. So why do these pullbacks give us such an edge? Well, they're predictable. You know, trends go up and up and up, and then they go down and down and down. And they have no real obvious points of entry unless you happen to know how to pick tops and bottoms. And if you do know that, you have no business being here, because that's the holy grail for everybody. Always, you know, buy it when it's at its lowest and sell it when it's at its highest. So pullbacks, though, happen over and over and over throughout a trend. Okay, so they're very predictable, very precise trade entry and management. We talk about this in the trade room all the time. I entered that trade because it met my rules, or I did not enter. I talked about it today. There was a trade in the room that others took. I didn't take because one little rule didn't meet my rules. One little criteria. And it was very easy to say yes or no. Okay, so the point of entry is very precise. There's no real difficult chart patterns to recognize, because all you have to do is wait for the correct confluence of indicators. And I'll show you that here in a few minutes. Very easy to design rules around. They're generally ignored by most retail traders as potential because of what I told you earlier. There's so much information out there about the way it's been done for the last 100 years that people start reading that, and the more you read something and the more you read it over and over and over in different places, you start to think, well, this is the truth because everybody keeps talking about this. The problem is old information continues to get regurgitated over and over and over again. So we also have a small drawdown potential. And here's the kicker. I want to get out of the markets as much as possible. I do not want my money exposed to the potential of these influences, of the market influences. So the sooner I can make a decision about what's about to happen right now and get out, the better, which causes a much lower stress type of environment. And if you're lower stress, you're going to be certainly having to manage your emotions less. Okay. And of course, this confluence of indicators that I told you about. So what is the second brain trading pullback? All right, so we've got this. Let's see, which one was that? I'm going to have to pull up this video here. Rather than show you static charts, I prefer to use videos because you can't really appreciate what's going on a static chart and price movement on a static chart, which is why you'll see a lot of that kind of stuff in other webinars, because it's easy to fool the viewer when you show a static chart, but when you show what's actually happening, that's a lot harder. I mean, there's no denying you can see exactly tick by tick what's happening. Now I'm gonna drag this. Hold on a second. I gotta fix something real quick. Okay, so I'm gonna drag this slider so you can see what's happening, and I'm just gonna show you. This looks like any old typical day. You're just watching the charts and really no particular area of interest unless you happen to be one of our traders. But nothing told you anything about what's likely to happen next. Now let me show you the same thing, but side by side with our indicators, okay? We do have a good bit of information. We already know that something is setting up for us here, okay? We already know that we've got some strong momentum. We already know that price is overbought and that it's highly likely that the market makers are manipulating this bar. That's what this is. That's our speed tick. So if you're trading our system, you already have your finger on the trigger, because all you're doing now this is a climax bar, and all you're doing now is waiting for the open of this bar. And that's where you put your trade on. Now, with this particular trade, you probably could have gotten filled a better fill. So what happened is the bar opened and backed up a little bit. So I actually would have shorted it up in here. And that is an immediate reaction to what's happening right now. Okay? That's what we're looking for. That's what we trade every day, and we do it over and over and over again. All right, let me show you some more. So on a static chart, this is what you're looking at, right? You've got a push. You've got a confluence of indicators. And I'm going to go through this in more detail. And then you have an obvious reaction. All right. Now, we do have some people come into the trade room and sometimes get a little intimidated because they see all these indicators and they see them all over the chart, and they go, well, what about all these false signals? And that tells me that it's usually a new trader or a trader that still has unreal or faulty assumptions or expectations about trading. Indicators only indicate that a condition exists, okay? Like driving a car, okay? Now this set of indicators told us that right now is a good place to take a trade, okay? We've actually combined that group of indicators into one indicator to make it even easier, okay? That's our Rockstar indicator. Excuse me. You'll learn more about the Rockstar here in a few minutes. But if you can drive a car, try to appreciate the fact that a car and your dashboard is just a set of indicators. None of them tell you to do something. All right? So you're looking at a group of indicators here, and you take in that information, and that information gives you everything you need to drive that car successfully. So we can apply these indicators to a car just like to a chart, all right? There's a potential for exhaustion, right? So there's a potential of running out of gas. So what do? Does that mean you stop the car right there on the side of the road and walk away? No, that tells you, okay, I could run out of gas. I should probably find a gas station. Okay. What about RPMs? That's the relative flow of orders, right? How fast is your engine revving? These are all just indicators of the current conditions. Okay. So don't be thrown off by the indicators on the chart. Okay. So now I'm going to show you how we qualify one of our rock star trades and a step-by-step way that we do this. Okay. It's really so simple. It's a step-by-step, very easy process to qualify one of our trade setups. And what I mean by step-by-step is if step one condition exists, then look for step two. If step one doesn't exist, then just sit there and keep waiting. Okay, so here again is a video. You'll notice right here that we're in a channel. Price is channeling. Okay, nothing is really going on, but more likely what's actually happening is the big boys are either accumulating or distributing their contracts or their stocks or whatever, so that this is where they're making their money. Okay, there's not much we can do with that. But what we can do is wait for price to break out of that channel with some strong momentum. Okay, so here we have price broke out of this channeling. Now, initially, we're not going to necessarily pay a whole lot of attention to this until we start getting some indicators. We start seeing some strong velocity. We start seeing some strong momentum. Think of velocity like a motorcycle taking off quickly. Okay. So we see some velocity. We see some strong momentum. Momentum is these black bars. They're turning into lighter gray, almost white. Now we've got, okay, so the breakout. Now we're paying attention. All those in the trade room, we're starting to, our fingers are starting to get itchy and our hands move over to the mouse, and we move our mouse over to our trading dome at this point. There is no trigger to take a trade yet, but a confluence of conditions are setting up. And if even if you've never traded our system before, you can look and see that something is happening here. Now this bar turns almost white. We're oversold. That's this blue outline. Now we're still oversold. Our momentum bar is white, meaning that it's gone from black to white. The lighter the color, the more imminent the pullback. All right, the more imminent it is that price is going to stop. We don't get a lot of white bars that just keep going and going. We might get one or two white bars, and then price is going to pull back. We've got what we call a speed tick here that says that the orders being processed inside this bar are happening much faster than retail traders are likely to be able to trade. So we're looking at strong momentum. We're looking at a manipulation, a mechanical manipulation, meaning it's probably computerized. We've got buyers laying and waiting down here, okay? And we can tell that by the way the orders are coming into this bar. All right. So right at the open, I want you to notice when this prints. Printed on the open of the bar. We all put on our order here, or there are a few people that will actually sit and wait until price maybe backs up a little bit and get their order in down here. And now all we're doing is waiting for this bounce because we're taking the information that's in the markets right now. We're using this bar, the information in this bar, to tell us what's likely to happen next. This is me looking out the window at the sunshine and clear skies. So I can say, yep, weather's going to be perfect for the next 5 minutes. Boom. And that's all I need. That's it. That's our edge, folks. And we do this over and over and over again. Funny thing is that trade could have been today, or it could have been 5 years ago. We're trading the exact same thing the exact same way. Of course, we didn't have the Rockstar 5 years ago, but we had all the indicators that are inside the Rockstar. So those of you that are a little unclear on indicators, I'm going to go through this real quick. I'm going to give you a 101 lesson on indicators, and some of you, maybe this will be your your paradigm shift if you think indicators do all the work for you. Indicators are nothing more than tools. What are tools? Tools make your job easier. They don't do anything. If you don't influence the tool the way you want to, it will sit there and do nothing. Okay, so here's tools that all of them need your influence in order to make them do anything. Okay, now we have indicators. What do? We put them on charts. Well, why do we do that? Oh, wait, what's a chart? A chart is a graphical representation of what institutions and people are thinking about price at a particular point in time. That's all. That's all a chart is. Don't try to make trading charts more than they actually are. The best indicators are going to give you the most information with the least amount of effort to understand what that indicator is telling you. All right? So they help us to take that information and decipher it into information that we can understand what people are thinking or institutions are thinking. And that's where we get our edge. All right, so now let's take another one of these. All right, so side by side, with and without indicators. And I'll show you how easy it is, how you have been, if you're not trading our system, how you have been missing some outstanding opportunities because you just didn't have the right way to measure these opportunities. So there's two Rockstar trades that happened really quick. We knew, if you're looking at this, how do you know how much further this is going to go before it stops and turns? We knew right here. We had the information to act on. All right. Again, how do you know based on this that something's about to happen? We know. We have all this information telling us that this is the spot to short it because we're measuring everything that's going on inside this bar. And when we have this confluence of information, and this, I could just show you 100 of these. They look the same way today as they did years ago. We're teaching the same things. Nothing changes. And here's the funny thing. Have you ever gone to a trade room and it seems like everything's changing all the time? They're always adding things. They're always changing things. They always have these new best ever. yet the guy has been trading for I don't know how many years successfully. Why do they keep doing that? Why do they keep changing things? If it works, it works. There was a winner. There's another winner. All right, so I could just do this all day, and I probably will show you some more. But it's about the easiest trading there is. Go over these indicators really quickly. We kind of have them broken down into kind of categories. We've got order flow indicators. And these indicators are the ones like the speed tick that I showed you, where we're measuring what's going on inside each bar, and we want to see that the rate at which the orders are being processed. You see that we have a histogram down at the bottom, and we don't use that during the trading day. That's just what we base our speed tick indicators on. But we can see that when orders increase in speed that they're being processed, such that it's highly unlikely retail traders are able to trade that fast, the current traders in the market, then that means it's a manipulated bar. And if we know it's manipulated, we pretty much know that something's about to happen. We also have another indicator called a ricochet. That's a byproduct, actually, and that's rapid acceleration. Okay. We have our pullback alert, where we're measuring the volume inside the bar for particular kinds of volume, because when this type of volume comes into a bar, something usually happens right after that. We're not measuring all volume. We don't care about all volume. Everybody looks at all volume. The big boys know we're looking at all volume. I want to see a particular kind of volume. Okay, so what do I mean by that? You look at these two bars. This is also how guys that show you nothing but static charts, they scroll around and they go, see this indicator here and here? Well, this is where I entered and it was a big winning trade. Okay, this is why it does this. That really doesn't work. I could convince you that these two bars are exactly the same. They look exactly the same. If you look at them on a static chart, they're exactly the same. Yet how they're built is very different. So you'll notice that they each start with a tick coming in. The one on the left, price kind of goes up and then pulls back. Okay, nothing real fancy going on there. The one on the right, price goes up, pulls back, it goes up again, pulls back, goes up, pulls back, goes up. So that's what we call a churning action. Now, are these bars identical? The one on the right actually gives us a whole lot of information about what the buyers and sellers are thinking at that price level. And that's what we want to know. All right, the next thing that we like to look at is divergence. We started out with a couple of divergence indicators, and they worked so well that we increased it. So for those of you that don't know what divergence is, and that's when price and momentum get out of sync with each other. You could actually use other oscillators, but momentum's the one that we like to use. When price and momentum get out of sync with each other, and they're not moving in the same direction, what that really means is momentum is leading price. Price will almost always change directions to go catch up with momentum. The reason why more people don't trade divergence is because it can be really complicated and difficult to understand, which is why we came up with our divergence indicators. You get a yes, no, not a bunch of lines drawn, and usually the divergence indicators that I was using or trying to use for years, I never could use. I ended up stopping, even though I knew divergence was supposed to be really good, because it was like 2 or 3 bars late. I would get a divergence signal, and it was always painting backwards. So I was always behind the curve when it came to divergence. So I created a divergence indicator that prints on the open of the current bar. Well, that algorithm works so well. We actually created our Super D indicator, and we've got 7 different momentum oscillators inside that using the same algorithm, but different momentum oscillators. All right, and then we have our momentum and exhaustion indicators. Again, I'll go through this really quickly. We've got our overbought, oversold indicator, our Mo meter, our velocity indicator, and our NRS zone. That allows us to take naked rockstar trades. Okay, and that's something that you'll learn about as one of our trade setups. And then, of course, we have major lines of support and resistance. We use floor trader pivots. We also have some relative strength numbers at the end of the line to help us with a couple of the trade setups that we take. Excuse me. Our newest and most popular indicator ever is the Rockstar indicator, which is really just a confluence of signals of our other indicators, but it just makes trading so much easier. Instead of having to mentally combine those signals, you can actually set it up inside the parameters of the indicator to generate signals on your set of rules. Okay, you say, okay, I want to have a white or a medium blue speed tick. I want to have these different divergences, but I don't like the divergences of these. I want to make sure that it's overbought. I don't care if it's overbought. You can set that all up inside the indicator to generate a rock star for you. Okay. Or do it like most people do and just set it up the way we use it in our trade room. Now, the important thing is that you know that these indicators are not telling you what to do next. Okay. They're simply helping us to understand what our competition's next move is likely to be. Okay? That's all they're doing. If we can anticipate that correctly, then we have an edge. And that makes it really, really easy. Okay? So I told you I'd show you some trades from today. And these were just ones I grabbed real quick. I didn't have a whole lot of time before you guys came and joined us here today, so I just grabbed some of them real quick off of the video. So if this is a little bit blurry, it's because of the video compression. It's better than it used to be. The video compression, they just came up with a new one. But it's still a little bit blurry because it came right off the video, and then I blow it up real big, and of course that makes it even grainier. So here's a few trades. Now, I showed you some videos a few minutes ago of some trades that could have happened last week, last month, last year, 3 years from now. Look and see how similar these trades that we traded today look to the trades that I showed you that we did a long time ago. Okay, so look. This is on the YM this morning. See the momentum, the black bars, strong push up. See the speed tick? We have a major line of resistance here. We have a ricochet. We have a lot of information that suggests that something is about to change. Now, on the open of this bar, we have our rock star. We also have 4 of our 7 momentum oscillators on our Super D. Says there is divergence here. One of them is also the MACD divergence. At the open of this bar, or better, is where we put the trade on. Now, we only want to know, we're only looking for 5 ticks. And this actually went 6 or 7. This is our sweet spot. Think about it as a bouncing ball. We come up, we slam into this line, and it bounces off. And then what happens after that, we don't care. Okay? So there's one of our winners today. Here's another one. Came up from black to gray to light gray to white. Okay, and I said we don't get many white bars, particularly contiguous. So we had a speed tick, overbought. This bar opened with a rock star, and down she goes. So we all got that one in the trade room. There's another one. Now we've got all the series of momentum, the black bars. We've got our pullback alert that says the volume inside this bar suggests that that something's about to change. Got our ricochet and a rock star on the open of this bar. All right, don't forget this is today. Okay, so there's no cherry picking. This is today. You can see the date right here. I didn't go have to look through months and months of trades to try to find something to show you guys. Here's another one. More of the same. It's absolutely amazing how consistent this is. Look, I even had one on the ES. All right, so what we're looking to do is help you build confidence, which then leads to consistency. When you become consistent, you do it over and over again, you become conditioned. Conditioned to only execute your trade plan. When you have confidence that the trades are going to work out, what happens to emotions? You don't have to use them anymore. Okay? So rather than using a single type of trading, we've actually combined a lot of type of trading. We like to use volume spread analysis and divergence and order flow and momentum and exhaustion. All right. So we already talked about divergence, and I'm not going to keep you guys here too much longer, but divergence is basically when the higher highs and lower lows, or the highs and lows is what I meant to say, of the swings in price are out of sync with each other. Okay. So you can here you can see that they're in sync. The lows are setting, the price is setting a lower low, momentum setting a lower low, price is setting a lower high, momentum. This is typical. This is typical for how price moves. Uh-oh. Look what happened here. Price is setting a higher low. Momentum is setting a higher low, but price is setting a lower low. So what does that tell you? Price wants to follow momentum. We have divergence. Look what price did. And if you get nothing else out of this, I hope you understand that about divergence. Okay? So order flow, this is how they used to read order flow. And basically what you're looking for is the big money. Okay? The big money have kind of aimed their sights at us because we're easy targets. Now, floor traders could do this just by watching what was going on. Okay, so like in poker, you read somebody's tells. Floor traders could read each other like poker players. But we can't do that anymore. So we have to read what's going on in the markets. We have to read the way the money is flowing. Now, the big boys get certain concessions from the exchanges in order to provide liquidity. We can't benefit from that because we don't have the kind of bucks to throw around that they do. So the exchanges allow them to make a lot of money off of us, plus the exchanges also give them credits. But the government has said, okay, we're going to allow it, but you can't. You've got to allow that information to be out there in the markets. You can't hide under cover. Doesn't mean they can't hide in plain sight, though, or attempt to hide in plain sight, which is what they do. If you know where to look, they can't hide. But most people don't know where to look. And that's what we do. We figured out how to find them by measuring the rate at which the orders are being processed. They can fake you out with placing and removing orders, but they cannot fake you out by orders that have actually been placed, meaning that orders that have been bought or sold. All right. So that's what we're looking for with our speed tick indicator. Now, the next thing, confluence. What we're looking for is an easy way to tell when these conditions exist, right? So with no real information, if you looked at any one of these charts with just a little bit of training, can you tell where the trade setup is? Just kind of at a glance. Okay. So we're looking for a confluence. So maybe you can. So let's say, okay, yeah, some of you picked out a couple of trade setups. Was it easy? Was it easy to see and read to make a quick decision? Probably not. So I started creating my own trading system and my own indicators. After I kind of had a handle on how I was going to do this and I started seeing some success, I thought, well, I can do this better, but I'm going to actually wipe the slate clean. And what I want is indicators that only tells me the information I need to make a decision and get rid of all of the information that does not give me a yes or no answer. Okay, kind of like fighter pilots way back in the day where they put their heads-up display. Only the information they needed in a dogfight was right in front of their eyes, so they didn't have to look away from their target. Okay, so and I thought, well, that's a really good way of going about doing that. So why don't I take all of that information on the right and apply it differently on the left? So those are the same exact same two charts. The one on the right and the one on the left are the exact same two charts with the exact same information. All I did was remove all the information I didn't need for making trade decisions. All right. So we have confluence. Yep. Easy to see and read. Yep. Now, it's confluence of non-correlated information, meaning that each indicator is its own set of data. We're not taking one set of data and applying lots of different algorithms to it. Okay. So we've got all of this information inside the indicators that give us an easy yes no answer when it comes time to place a trade. So in today's market, what makes more sense? Exposure to the market influences for a long time for just a single trade? What about the unforeseen? Can you ever count on when this is going to happen? We didn't have to worry about this just a few years ago, did we? But times are different. And this is just one example of how times are different. Most of you are still trying to do this with old information about trading. Short-term exposure with multiple opportunities is the safest and best way to trade. Okay? So remember, the markets have a bunch of cash for you, and you just got to take it. And I'm going to teach you how. Okay, so you can get started. Just take a look at these specials that we got for you. Um, we've got the Smart Start bundle, so you can get started, save a couple $100, and just basically get started with us. Hang out in the trade room with us, and we'll give you enough indicators to trade. To kind of get started, get comfortable with what we're doing. If you want to take the next step up, you can get one of our kind of a mid-level, what we call our Scholar bundle. So more indicators, which means more confluence to qualify the trade room. I'm in the trade room. I was reading to qualify the trade setup, and a couple of months in the trade room. Or by far the most popular and biggest bang for the buck is our Einstein bundle. You save over $1,000 on that, and you get all of our indicators that we have in the trade room. You get all the indicators we ever develop for the trade room. You get unlimited time in the trade room. You get our fast forward training program. You get weekly mentoring. You get, priority tech support. Like I mentioned, we've got this peer mentoring program coming out soon. That's going to be, it really is going to be a great tool. We've got a whole bunch of add-ons for NinjaTrader 8 that we usually charge for, but you get them for free. Just a whole bunch of stuff. That's really the biggest bang for the buck is for the Einstein bundle. So that's it. I have reached the end. I thank you guys for hanging in there. I hope you found it interesting. Now, I didn't look at any questions. I don't think you had any questions. Anybody here have any questions? I don't see any. Did you wait? I have a question. Not you. No. No. Never. Anybody else have any questions? Yeah, come hang out in our trade room with us for a while and you'll get to know Ruan. The nutter. Yeah, Heinz, it's a really cool program. Do you remember? You remember back in the day that we had the Trader RX program, Heinz? You remember that? Oh yeah, Bonnie. No, it works on other charts. But remember what I was talking about. We want an immediate reaction to the information that's coming in right now. What better information is there than what's coming in right now than on a fast chart like a 1-minute chart? Yes, the Smart Start does. It enables you to trade that trade, but it doesn't have a couple of the indicators in it. You might want to get them separately or add them as time goes on. We tried to create bundles that helped people get started. Okay. Naturally, the more confluence of indicators you have, the more likely it is that you'll be able to trade this successfully. Okay, so that's what I'm going to tell you. Yeah, you can get started, but it's going to be, I think ultimately you'll want to get more. Okay, so Heinz, remember the Trader RX, you remember that. Okay, so you remember how much time it took for us mentors to help the people we were mentoring. It's a very time intensive thing to truly mentor somebody. So what I've done is I've gone in and I have kind of rebuilt it so that you guys can actually mentor each other. So we actually have a whole back end program where you log in, where you log your trades, your buddy sees your logged in trades, you make comment about those trades, then you can comment on his trades, he comments on your trades. You help each other out this way. Okay. Alex, who's in the trade room, he's been with us a long time. Um, he and another guy did this for a while, and they were very successful together doing this. So it kind of made me think, if they can do that, I have the program is built. The Trader RX program was a great program for a lot of people, but we kind of stopped doing it because it took too much of our time. Okay. Oh yeah, I didn't put the CVI in there, Ruan, because we haven't used it inside of officially inside any of the setups yet. That's why. That's the only reason. Once it's part of our setups, then it will absolutely be. In fact, we'll probably have a whole event just about the CVI. For those of you that don't know, that's a climactic volume indicator. Yeah, it's awesome, isn't it? So essentially, that's what it is. Heinz is you're mentoring somebody else, and they're mentoring you. Great, John. Yep, we're glad to have you. Two weeks. Yep, it will be ready in 2 weeks. All right. Well, again, thanks everybody for coming. I hope this was informative for you. If you've got any questions, send us contact us at support@theintentionaltrader.com. All right, everybody, have a great evening, and I hope we see y'all soon. Bye now.